gold was on track to hit new all-time highs, but then got hit with some back-and-forth bear market action. What's behind the gold shorting? Can the bullish trend from late last year still hold up? And what kind of potential risk events could cause market swings? All that and more in this week's As Good as Gold. Greetings, fellow traders. I'm Dylan, a research strategist at Pepperstone, presenting the latest weekly update on As Good as Gold. Over the past week, gold bears have shown their strength again, but the price has still hovered at elevated levels. The rise of Deepseek has shaken up the gold market, while potential US tariffs and calls for Fed rate cuts have provided support for gold's rise. For gold traders, this week's Fed rate decision, Powell's speech, and the US core PCE inflation data are key to watch. This could be crucial factors in determining whether gold can break new highs. So now let's quickly review the gold against US dollar daily chart. As of last week, the overall price continues its upward trend, coming within just $4 of the all-time high on Friday. And just when we're ready to see headlines like gold hits $2,800 all over the world, bears suddenly entered on Monday, causing gold to close down more than 1%. However, by the second day, the bearish momentum was broken and the price was pushed back above $2,660. If the price maintains its upward trajectory, breaking through the $2,790 and $2,800 levels could further boost confidence among buyers. While on the other hand, if the price retraces, the reaction around the local high of $2,720 from late last year will be worth watching. Well, I know it's really hard to ignore how Monday's bearish candle stands out against the backdrop of several strong bullish candles. Deepseek's sudden rise sparked investor interest in China's AI industry and concerns about the high valuation of US tech stocks and questions about investment logic have caused massive unwinding by US equity bulls. So I would say the liquidity problems somehow triggered by Deepseek's lack of visibility on many investors' radar have led to a broad sell-off of assets, including gold. However, as the market gradually digests the impact of Deepseek on the AI industry and somehow realizes that we are a little bit far from discussing something like the replacement of NVIDIA's leadership or China's AI dominance, risk aversion has once again become the preferred strategy for traders. Apart from the risk-off sentiment stemming from Deepseek, another factor driving gold's rise is hedging against tariff policies. On one hand, the U.S. authorities' handling of the Colombia tariff issue has reinforced their resolve to implement a series of tariffs starting on February the 1st, sparking traders to reassess the likelihood of aggressive tariffs in the future. In other words, they've shown the market that they can act if they want to. On the other hand, potential tariffs could not only drive up domestic US inflation and pose some economic risks, but could also accelerate other countries' de-dollarization processes. Both of these factors increase gold's appeal. Additionally, with the president's recent public calls for immediate rate cuts from the Fed, alongside low U.S. Treasury yields and significant retreat in the U.S. dollar, I personally believe gold's short-term uptrend narrative remains quite intact. So overall, gold has been trading in a back-and-forth pattern, but it is still trading at elevated levels. In my view, the path of least resistance for gold in the short term remains upwards. And as traders wait for some updates on Deepseek and US tariff policies, all eyes are on tonight's Fed meeting, especially Powell's speech and the US core PCE inflation data for December due out on Friday. The consensus is that the Fed will keep rates unchanged, and if Powell somehow can resist pressure from the president and maintain a quite hawkish tone, the probability of a gold price pullback will increase. And with the US inflation's decline stalling over the past few months, the core PCE will be closely watched by the Fed as well. The consensus is that the year-on-year increase for December will remain at 2.8%. Any data above market expectations will reinforce the Fed stance on pausing rate cuts, while signals that contradict the president's goals could lead to volatility in the gold market. So that's pretty much all for this week. If this video was helpful, don't forget to subscribe, like, and spread the love. If you have any ideas on how the upcoming data and events might impact gold trading, drop a comment below and let's chat about it. Stay tuned with Pepperstone for more insights and updates. And on the first day of the Chinese New Year, I wish everyone a prosperous year of the snake and smooth trading ahead. And until then, happy trading!